makers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Anna Edwards in for Francine Lacqua here in London this hour. Now, shares of BP are a little higher, have been trading higher this morning after the oil giant agreed to sell a majority stake in its Castrol lubricants division to the US investment firm Stonepeak Partners to raise about $6 billion. Joining us for more is our Bloomberg big oil reporter, Mitchell Furman, who is with us this Christmas Eve and can break down the story for us. So we've got some news to talk about, at least, Mitchell, which is good on perhaps what would be normally a slow news day. How big a deal is this then for BP and for Stonepeak?
Yeah, good morning. It's the centerpiece of BP's $20 billion divestment program. The company announced in February a strategic reset to move away from its failed low carbon bets and back to oil and gas. And part of that was divesting $20 billion of assets to improve the balance sheet and reverse years of underperformance in which the gap between BP and its competitors has widened.
And so does that mean that this Castrol sale, does it mean that BP can streamline its portfolio? Because this has been the area of focus from a particular activist investor who's had a huge amount of impact at BP.
Yeah, this does make some headway in BP's portfolio. Castrol, even though it has been in BP's portfolio this century since it acquired it 25 years ago, the asset was not as fully integrated as other parts of the business. And what that means is BP, while it's a massive oil and gas producer, it is also a major commodities trader, and Castrol was never really integrated into the trading business like BP's refineries and upstream assets and pipelines, which its traders can use to optimize, and so Castrol never really played in that way. So it allows BP to kind of to focus on parts of the business where it can optimize its trading advantages.
So that's why this might be the right asset sale, Mitchell. What about other asset sales? This has been an ongoing program of selling assets to get back to basics, I suppose, for this oil business. What are we expecting in 2026 on that front?
Yeah, your questions are as good as anybody's, because the new chairman just last week announced abruptly that CEO Murray Auchincloss, who announced the strategic reset in February, will be departing the oil major, and Meg O'Neill, Woodside Energy's CEO, will be coming in as CEO to replace him. We don't know what Meg O'Neill wants to do. We do know that the chairman wants BP to perform better. He wants a simpler, leaner BP that accelerates this oil and gas strategy. But how exactly BP gets there remains to be seen, and Meg O'Neill will have to answer those questions in the coming months. She takes over on April 1st.
OK, Mitchell, thank you very much. Thanks for the briefing. A lot to come then from BP in 2026, no doubt. Bloomberg's Mitchell Furman on the oil narrative this morning. Let's turn to news coming out of the pharmaceuticals sector. Shares of Sanofi on the move this morning. The firm agreed to buy Dynavax Technologies for about $2.2 billion in a bid to expand its vaccine portfolio. The stock is down by 0.3% right now. We're joined now by Bloomberg's health reporter Ashley Furlong. Ashley, good morning. Is it surprising that this business, that Sanofi is doing this deal for a vaccine developer right now? Talk us through the logic.
It's really interesting. So obviously at the moment we're seeing vaccine sales globally are down. In the US, we're seeing a very specific scenario play out. We have a health secretary, Robert F. Kennedy, that is almost systematically undermining many of the tenets of vaccines and sort of bringing in questions around vaccine safety. Many of those questions are targeted at childhood immunizations. So this deal that we've seen Sanofi do is mainly on adult immunizations. So potentially there's less of a tension there, but it's definitely a really interesting time to be doing a vaccines deal when globally, and Sanofi itself has said that vaccine sales are not doing as well as hoped.
Yes, so that's really interesting on the vaccine side of things and why make this bet on vaccines at this point. Elsewhere in the Sanofi business then, Ashley, the company has said that the US FDA has also rejected its drug for multiple sclerosis. What does that kind of setback mean for this French pharmaceutical business?
It's a significant setback, but as we've seen, the shares haven't actually reacted that much to this, and that's really because it's almost been priced in already. We saw, just earlier this month, the FDA said it was going to delay its decision on this multiple sclerosis drug, and already analysts had sort of anticipated that this might have been as a negative reaction. But it's significant for a company that's really trying to replace its top-selling drug, Dupixent, and this was supposed to be sort of part of that picture of replacing it. And now it looks like that $1.7 billion in annual revenue that we was sort of hoped for this drug is really, under question. And there's questions around whether, it'll be able to get any of that revenue in the coming years.
Ashley, thanks so much. Thanks for the update. Have a good break. Bloomberg's health reporter Ashley Furlan with the latest there on Sanofi. Let's widen the lens a little bit. Stocks and commodities hitting records. Geopolitical tension and data from the United States showing the economy expanded at its fastest pace in 2 years. All of that's very much in the background for all asset classes right now. Let's turn to what this means for credit markets. Josh Farber is with us, head of European credit strategy at BNP Paribas Credit 360. Josh, nice to speak to you. Thank you for coming to speak to us on the 24th of December, no less. So we've got a host of themes in play right now. Stocks are doing really well. Metals, commodities doing really well. What kind of optimism do credit markets go into 2026 with? What does the outlook look like to you?
Well, we're bullish on credit, and we think that while most assets price that bullishness, not all of them do. And we want to look to buy the assets that have not kept up with the rally. And the place we start is high yield single B in Europe.
OK, so high yield single B in Europe. Why the high yield? Why not investment grade? What is it about the high yield space that you think is sort of worth the risk and paying you the reward you need?
Yeah, that's a great question. So the first point is that the risk to the downside from lower growth, we think, has gone away. We think that the path is towards a warmer European economy led by German fiscal. And high yield is particularly exposed to increasing growth. And the other point is that high yield is cheap. High yield is cheap, especially single B, because it was unfairly tainted by the private credit defaults in the US.
That's interesting. And so tell me more about the link between the German fiscal push and what that means for this particular part of the credit space. Because, in Germany, they're loading up on defence spending. They're also doing infrastructure investments. Is it in both areas that you'd expect this to play out well for credit? Or is it just more the mood music around the government spending more and the sort of multiplier effects into the German economy?
First of all, it's the point of the aggregate growth picture is stronger. And in high yield, what you really care about is, do you get your money back? It's hard to have defaults when the economy is growing faster. The second point is that having a glut of bunds, which we're not really used to in Europe, means that the assets which compete for bunds and fixed income, like high yield, there's relatively fewer of them around. And the scarcity point, we think people will flee rates and go into credit.
OK, so where does that leave the European government bond markets? We've spent a lot of this year talking about stress in France in particular, and some corporates in France can borrow more cheaply than the sovereign, for example, now. But where does this leave the European government bond markets in relation to your preference for high yield in Europe?
So we think that the point is that there's enough government bond supply to keep rates steep and relatively high in euros. And that is kind of a sweet spot for credit, where it's enough yield to attract investors in, but it's not so volatile to scare investors away.
And the sovereign side, or is that left to others to decide whether you take exposure to the sovereign side?
Yeah, listen, I am the credit guy. I would say the main point is that we are quite comfortable on how the European system is positioned as respect to credit. And so this convergence trend that we see, if we have more of Bund, we have less of everything else. And that's quite healthy from a credit perspective, because then you don't have to think about sovereign risk in the way you did 10 or 15 years ago.
Yeah. Credit markets have been enjoying quite a lot of issuance from hyperscalers recently, Josh. Is that something that we're going to be watching play out even more in 2026?
That is the key thing to watch. So in cash, while we want to buy single B as our main asset of choice, the thing we want to sell is the long end of IG in euros. I mean, both euros and dollars, but especially in euros. We are not used to the level of duration, the level of supply that we're going to see from these high-quality hyperscalers. And so that's basically the pincer movement of the compression trade, is that on the one hand, high-risk assets are undersupplied and low-risk assets are very heavily supplied. And we think that something like 10% of the total hyperscaler debt issuance is going to come to euros. But 10% of the American market, when the dollar market is 3 times the size of the euro market and about 2.5 times the duration, it's really a very big deal from our perspective.
Okay, so not very attractive then, the debt issued by some of these big hyperscalers, whether in dollars or in euros, not paying you enough for the not attractive enough. Is that the verdict?
It's not the issuers themselves. It's more the duration bucket of the existing bonds will need to reprice from every company that issues at the long end in order to compete with the supply that's coming.
Okay, yeah, so that's what it does to the rest of the market. I mean, we've been talking to a lot of people about whether stocks are overvalued in the hyperscaler space, for example. And one of the things they tell us to watch is debt levels. They say it's very different to the late 90s right now because these are not very indebted companies. Your caution around these hyperscalers, then, it's not to do with being worried about debt sustainability. It's more about whether you're getting enough reward for taking on the debt.
Yeah, it's a very different fundamental position. We think that part of the reason why the debt is coming is because they can afford to do it. But the point from the investor perspective is the technical around the supply and demand. There is so much supply that it will reprice the market.
Yeah, I mean, are there areas that you do worry about too fast a growth rate of debt for some of these businesses on the AI build out, on the data center build out? Are there any alarm bells going off right now, or no?
No, we don't have alarm bells. I mean, obviously, you need to look at the credits case by case. But on the whole, we think that credit is still in a fairly sweet spot where there is enough supply in dollars maybe to cure the bond scarcity, but not so much as to drown us.
We talked at the beginning of this programme about some M&A stories, BP selling one asset, Sanofi buying another asset. And if M&A really comes back as a big theme in 2026, well, it's arguably here already, and investment bankers have been telling us it was coming for a while. Private equity pleased with maybe what they're seeing there as well. If we see much more M&A, is that going to mean a lot more credit issuance? Is this something that's going to play into your space?
Yeah, that plays into our forecast, but it is largely a dollar story. So the animal spirits are much stronger in the U.S. In Europe, we say it's a little bit more like a plant. The pace of M&A that we expect in Europe is materially slower, and that reflects just a different economy and a different sector mix.
Okay, so the M&A story really will just be stateside, do you think, of the step up in M&A? Because a lot of private equity names in Europe have been waiting for a long time for M&A to kick in so that they can try and get some of their money back.
We think that it is a substantially U.S. story, yes.
All right, Josh, thank you very much. Thank you for joining us. Josh Farber, Head of European Credit Strategy at BNP Paribas Credit 360. Coming up on the programme, President Trump has reignited tensions over Greenland this week as he appointed his first ever, or the first ever, US envoy to Greenland. We will discuss with Roberta Haar, Professor of Foreign Policy at Maastricht University. That's next. This is Bloomberg. Welcome back. This is The Pulse. Now the conversations that matter and the insights you need, live from London. President Volodymyr Zelenskiy says Ukraine and the United States remain split primarily on territorial issues in talks on a peace plan to end Russia's war. Weeks of US-brokered talks have produced a 20-point peace plan that could become the basis for ending Europe's worst conflict since World War II. The Ukrainian leader emphasized that the draft largely reflects the joint Ukrainian-American position, and some points still need to be finalized. Meanwhile, Russia continues to target Ukraine's power supply with missiles and drones at a time of year when temperatures are around freezing. Maxim Timchenko is the CEO of Ukraine's biggest private energy infrastructure developer, DTEK, and he told Bloomberg this is going to be the hardest winter yet.
Unfortunately, just in these minutes, we are under massive attacks of Russians, and then the major target of today's attack is power station. So, as you know, we been attacked only power station of the TEK more than 6 times since September this year. And I believe that this coming winter will be the hardest winter since full-scale invasion.
Meanwhile, the Trump administration has imposed visa sanctions on former EU Commissioner Thierry Breton and 4 other people for trying to make American tech companies police political speech. In a post on X, Breton responded that the European law was voted in with broad-based support, writing, quote, "To our American friends, censorship isn't where you think it is." The State Department also targeted activists and non-profits focused on digital hate speech and countering extremism. Let's discuss the broad defense and diplomatic tensions between Washington and Brussels then with Roberta Haar, Professor of Foreign Policy at Maastricht University. Professor Haar, very nice to have you with us. Thank you so much for joining us. Let's start with the broad state of affairs transatlantically. We recently heard from the United States codifying their security strategy under this new national security document. I wonder where that leaves the state of relationships across the Atlantic.
Thank you very much for having me this morning. Yes, at the moment, relations have been very bumpy. Certainly, the document that just came out really would push, as you mentioned before, the far right or those that are aligning most with the MAGA, the ideas within Europe. And this would seem to support the idea that also with J.D. Vance, that this whole digital governance is a problem, that as you said, Breton is really thinking about all the EU's foreign policy positions there. Okay. Sorry, I'm getting rather nervous again.
That's okay. Roberta, well, let me ask you a question on that subject, because that might help us to focus the conversation a little more. I mean, how do you think that Europe should respond? So the United States has now placed sanctions on people like Thierry Breton. They would argue they're tackling hate speech, but the US government suggests that they've been targeting free speech. How should Europe try to respond to that sanctioning of those kinds of individuals?
Well, I think that although they have been trying this flattering ploy and sort of responding to Trump's pay-to-play foreign policy, I think that the Europeans should be more in line with what Breton is trying to do, that they should firmly resist U.S. pressure to safeguard. They should try to safeguard their regulatory autonomy, especially when it comes to strategic technologies. I recently wrote a policy brief with Professor Sophie van Hoenecker, and we also said that they should have clear internal positions. They should resist attempts to dilute or reinterpret their digital regulations, like the Digital Markets Act, the Digital Service Act, the AI Act. They should try to uphold the credibility as a global regulatory leader. I think that they should resist trying to trade away their digital standards in negotiations concerning trade, tariffs, certainly their security cooperation. I think they should try to shield their EU decision-making from their coercive bargaining tactics coming out of the Trump administration.
And Roberta, why do you think that Europe appears so constrained when it comes to dealing with President Trump? I mean, clearly, with the United States providing the security backdrop over decades, that has become too comfortable a position, perhaps, for Europe. Certainly, that would be the view of the Americans. And so maybe that limits Europe's ability to push back against the Trump administration.
Well, Europe definitely has a history of fragmentation, a history of thinking of sovereignty mindsets. They also have many vulnerabilities. But I do think they need to intensify their indigenous military and technological capabilities, and they are doing that. I mean, I'm sure you have discussed already that the London-based IISS, the International Institute for Strategic Studies, has talked about the threat from Russia coming as early as 2027. And it could take as much as $1 trillion to bring up their non-nuclear capabilities to on a level that the U.S. is currently providing. They are doing that. But I think that this fragmentation in procurement, and they should have more joint procurement. They should have less weapon systems compared to they have in the past. These are all things that they need to do to restructure their European defense procurement and posture.
Yes. With all that said, then, I mean, another example of a flare-up in tensions might be around Greenland, and we talked about this a little bit yesterday, and the story sort of lingers. How should Europe respond on this kind of front? President Trump appointing somebody to be almost like an ambassador to Greenland and making clear that there's still an intention to try and make that American.
Well, certainly Trump has this pay-to-play foreign policy that I talked about, which unfortunately is sort of based on more of a overseas pressure. Lots of corruption seems to be involved in that. Sort of survival of the fittest, and Greenland, I guess, would fall into that. Natalie Tochi has written a recent foreign policy article that is sort of part of a goal to have Europe as sort of a neo-colonial outlook on how to deal with Europe, that sort of there be the winners in the survival of the fittest. So he likes his tough guys. Europe, and this would be sort of the replaced by the alpha males of the world. Sort of that's what he's looking at.
Yes, and part of that, perhaps, that analysis, Roberta, does that include the relationship with Russia, which has been truly reshaped, I suppose, under this Trump presidency?
Well, I think that Trump actually has this fondness for Russia, or a idea that he wants to deal in a transactional way or an investment way with Russia since his first administration. In an article that I wrote in 2021, certainly that is consistent with his view for even before he became president, that he had this very positive view towards Putin and towards Russia, and now he's talking about all the investment possibilities with Russia. So certainly he likes tough guys. In a recent interview that Trump did with Politico, he also called European leaders weak, but he was very positive about Erdogan of Turkey. So he called him a tough cookie. So I think another way that Europe can respond to Trump is sort of not letting him bully them, but to do what Mark Carney did, or what Erdogan does, or what even Susie Wiles talked about in her recent interview. Stand up to him, or be more not so flattering, but more resilient and more tough.
Okay. Roberta, thank you very much. Thank you for joining us today. Roberta Haar, Professor of Foreign Policy at Maastricht University. Coming up on the programme, a busy year in the courts for President Trump as his administration loses a case at the Supreme Court, but has another ruling upheld by a federal judge. All of that just yesterday. We break down all of this with a law professor shortly. This is Bloomberg. Good morning. Welcome back to the Pulse. I'm Anna Edwards, in for Francine Lacqua in London this morning. These are your top stories. The Santa rally marches on. The S&P hits a record and gold breaks through 4,500 a troy ounce for the first time. Markets on both sides of the pond close early today. Blowout GDP in the USA. American growth crushes estimates in the third quarter with its fastest reading in 2 years. And a setback, perhaps, for big tech and skilled foreign workers. A federal judge said the Trump administration can move ahead with a $100,000 fee on applications for new H-1B visas. Welcome back to the programme. So it has been a busy year for President Donald Trump when it comes to setting policy and expanding the limits of presidential power, certainly of testing them, with his tariff announcements, in particular, sending shockwaves around the world. Bloomberg Economics chief economist Tom Orlick looks at the White House trade policy and what it means for inflation and the US consumer.
credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. Why is that? It's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load shipping to the United States before the tariffs could come into force. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals. There's something of a Swiss cheese of exemptions and carve-outs. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's One Big Beautiful Bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. Tariffs are having an effect. China's exports to the United States are way down relative to the historical trend. So, who pays for the cost of tariffs? Despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. All of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households.
That was Bloomberg's Tom Orlick reporting there on White House trade policy and the impact it has and has not had on the US economy. Let's pivot from the economic side of things to the legal side. A federal judge has ruled that the Trump administration can go ahead with imposing a $100,000 fee on new H-1B visa applications. The decision is a setback for US tech companies, perhaps, that rely on hiring skilled foreign workers. The judge said the move was lawful, but the US Chamber of Commerce, which sued to block the proposal, can now appeal. Meanwhile, the US Supreme Court has refused to let President Trump deploy National Guard troops in Chicago. A majority of judges ruled that the administration failed to identify a source of authority that would allow the military to execute the laws. The move is a setback for Trump's drive to use the military in cities across the country. Let's put all of this together as the year comes to a close and assess the relationship between the executive and the legal system in the United States. We're joined now to discuss the Supreme Court in particular by Ilaria Gioia, who is with us to talk about the legal side, law professor at Birmingham City University. Really good to have you with us, Ilaria. Thank you very much for your time today. So we just went through a couple of stories that illustrate how in some cases President Trump is winning out and the executive is getting its way in what it wants, and in other ways the law and the legal system is pushing back against him. How would you evaluate 2025, Ilaria, and the relationship that we've seen between the legal system and the executive?
2025 has been a very interesting year for a law professor to watch, and I think for everyone. As we know, if we put it on a frame, the Supreme Court is a conservative court. President Trump has appointed 3 of its members. So actually what we expected was the Supreme Court to be increasingly favoring President Trump. This has been evident in many cases. You just mentioned the tariffs case. Well, the case was discussed in November. The hearing was in November in the Supreme Court. We don't know yet the outcome of the case. But we know that President Trump is pushing the judges to rule in his favor, and he's doing this through social media. He's doing this sort of psychological pressure on the judges that are his nominees. This is, in fact, one of the main characteristics of the American system, of the American judicial system. The judges are nominated by the president. So it's somehow politicized. It's a court that is very explicitly politicized, and it is a court that is ideological. So conservatives, judges uphold their conservative ideology.
Okay, and so in the main, this year, Ilaria, have we seen the Supreme Court act in support of President Trump more than we might have done under previous Supreme Courts when they were not, they didn't represent quite so many of President Trump's appointments?
Well, if we put everything on the scale, we can see that the trend already started during the Biden presidency. Many of the decisions during the Biden presidencies were taken by the same justices. So the trend is actually going back to first Trump presidency, and is sort of slowly increasing. But I wouldn't say that this is something completely new or unexpected. This is just a consequence of the first Trump presidency, of the nomination of 3 justices. And as I said, we already saw the trend under Biden, and this expansion of executive power that you mentioned, that that is very, very evident, started already under the Biden presidency.
Yes. Give us a sense of how much, OK, so under President Biden and President Trump, how much of a step up we're seeing in this use of unilateral executive action?
Well, think about this. There is a theory, it's called the executive unitary theory, that says that the president should have all the power over the executive. What does it mean over the executive? It means over administrative agencies, and it means that the power that Congress delegates to president, it's power that the president can hold unilaterally. Now, what we have seen recently, not only in the court, but in fact, is the Congress slowly delegating more authority to the president. And this is what happened, for example, when it comes to tariff. So President Trump is arguing that the Congress is giving him the power to impose tariff. And this is, as I said, a slowly process that has happened because, for one main reason, it's not only because of the court, it's because Congress is giving up its competencies to the president. The polarization that we have in Congress, the gridlock, this increasing difficulty in coming to a decision means that the president has the upper hand. And this delegation of power has been approved by Congress and is now under review in the Supreme Court. So the Supreme Court will
have to decide. Yes. Ilaria, is it your expectation then that the Supreme Court will agree with that view, President Trump's view, and support President Trump in what he's trying to do on these IEEPA tariffs, International Emergency Economic Powers tariffs? Is it your view that that will happen? Or we saw quite a lot of reporting that suggested the early commentary coming from the Supreme Court would push against the president.
Indeed, during the hearing, the justices were pushing against the president and were pushing against the federal representative for Trump. His nominees were pushing against him. But this doesn't mean anything because the decisions will have to be made on paper. It will take time for the decision to arise. And there have been, of course, amicus briefs pushing against this decision. But the fact remains that the court is a conservative court. And if we don't see a decision in favor of Trump, we will see a decision maybe of those neutral decisions of the Supreme Court abstaining from deciding. This is also another option. I don't see the Supreme Court to be completely in favor of Trump being able to impose tariffs, because it's a very narrow legal issue that they will have to decide on. It's quite problematic, but I see the Supreme Court using his very interesting legal weapons to make a decision that will be controversial. Yes.
Okay, Ilaria, so I hadn't realised that they could abstain, so that's interesting as well. Just briefly, when do we expect to hear? Some had expected that we might get a decision this week, but looking less likely, I suppose.
The case is not a normal case. It's one of those expedited decisions. So usually cases are decided in June of the year, but I would expect this case to be decided a bit earlier, perhaps January or February, because it will need an expedited decision.
Ilaria, thank you so much for joining us. Ilaria Gioia, law professor at Birmingham City University, with that useful briefing on the legal system and the executive in the United States. Thank you so much for your time. 9:42 on the 24th of December. We are watching oil prices a little bit firmer this morning. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the United States. Data from maritime intelligence firm Kepler shows this. Most of the tankers are headed to Washington, and at least half of them are chartered by Chevron. This comes as the Trump administration intensifies efforts to curb Caracas's oil revenue by targeting sanctioned vessels. The Venezuelan democracy activist and Nobel laureate Maria Corina Machado told Bloomberg in October the U.S. pressure on Caracas should force President Maduro to begin a transfer of power.
I believe that the increase in pressure and the escalation that's taken place is the only way to force Maduro to understand that it's time to go. And those that still support him, which are very few at this moment, the top brass of the military, financial enablers, front men that are making huge, obscene fortunes with the hunger of our people, better understand that, time is running out. And I believe that this escalation is the last opportunity for those that still support Maduro to understand that they need to put, aside, take all support away from him, and Maduro himself to understand that this is the last chance to truly facilitate a peaceful and orderly transition, which is what we want.
In other global news, Libya's military chief of staff has been killed alongside 7 other people in a plane crash in Turkey. Mohammed Ali Ahmed al-Haddad had been returning to Tripoli from Ankara when the plane reported an electrical malfunction shortly after takeoff. For more, let's bring in Bloomberg's managing editor for Middle East and North Africa, Ona And. Ona, thanks so much for joining us. What do we know so far about this crash?
The jet carrying the Libyan delegation crashed shortly after its takeoff at about 8 p.m. local time in Ankara. That's the Turkish capital, Anna. The plane had notified the air control that it was suffering from an electrical fault and asked for an emergency landing back in Istanbul, where it had taken off from. And preparations were underway for that landing when radio contact with the plane was lost. Its wreckage was later found in the Haymana district in the Turkish capital, with all on board. A total of 8 people, including crew members, were killed. The Libyan military delegation was headed by Mohammed Ali Ahmed al-Haddad, as I said. He was the military chief of staff of the government in Western Libya, in Tripoli. He was a well-respected figure back in Tripoli and a key figure in UN-backed talks aimed at unifying the two rival governments in Libya, where there are two administrations, one in the western city of Tripoli and the other one in the east in Benghazi.
Yes, with all of that backdrop in mind, Ona, why was the delegation visiting Turkey?
He was in Ankara for defense talks. His government, his administration in Tripoli has been backed by the Turkish government, and that backing was most pronounced about 5-6 years ago when a predecessor to the current administration in Tripoli was under assault by forces in the east of the country, and the Turkish backing has pretty much sort of saved that administration from collapsing. Since then, we know that the government in the west that Haddad belonged to has been operating Turkish military equipment, including Bayraktar drones such as Akıncı and TB2. And TB2 is very well known in this region. They have been used successfully and widely in conflicts from Libya all the way to the war in Ukraine and in Nagorno-Karabakh, where Azerbaijan and Armenia had fought a war, a 44-day war back in 2020. So that defense cooperation was the main item that the delegation had come to Ankara to discuss before they tried to fly back to Tripoli before their jet crashed.
Ona, thank you. Thanks for the update. Bloomberg's Ona Ant. Coming up on the programme, the French National Assembly has approved a stopgap budget law for next year. We will bring you the latest next. This is Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Anna Edwards in London. The French National Assembly has approved a stopgap budget law for next year after failing to agree on the full fiscal plan. The so-called loi spéciale, or special law, effectively rolls over 2025 fiscal plans into the new year, allowing the state to continue to collect taxes and borrow money. For more, let's get to Jean Dalbar, who is economist at Bloomberg Economics and joins us now to talk about the French economy. Jean, thank you for your time this morning. So we still don't have a full budget for 2026, but are we making progress towards a full budget? Where are the sticking points now?
Well, actually, the political situation remains particularly complex. Parliament is deeply fragmented between the Conservative Senate and the left-leaning National Assembly. On top of that, political parties are unwilling to compromise and are looking to bring home some major concessions from the government, like, for example, higher taxation on wealth for the Socialist Party. However, on the budget itself, we think that the compromise is within reach. Some 10 billion euros of tax hikes or expenditure cuts are missing to reach the 5% deficit target for 2026, which I guess is quite doable in the first weeks of 2026. And as a matter of fact, I mean, the political risk premium in the market is fading. If you look at the 10-year spread over Germany, it's now back to its August level, which is, I guess, quite a good sign for the budget negotiations.
Yes, indeed, the spread in focus. Your analysis talks about how France can raise the money that it needs, perhaps saving billions by borrowing short-term debt. We've seen a lot of governments putting the focus on the short-term debt raising as opposed to the long end of the curve. What's the story behind this analysis?
Sure. I mean, just to take a step back, France needs to find more than 100 billion euros of savings over 4 years just to reach its European commitment of bringing the deficit back to 3% of GDP in 2029. To do that, major spending cuts and notably a new pension reform, as well as tax increases, will remain crucial to keep the deficit under control. But in this context, we can look at other ways to save money. And that's why we looked at the impact of issuing shorter bonds to reduce interest payments. And in our analysis, this will help. I mean, this would bring some help to reduce interest payments over time. It would be the gains would be bigger if the ECB were to be a bit more dovish, of course, but still, that's something helpful. However, it would come at a high cost. It would notably increase the rollover risk, and that's something which leads us to say that it will be ultimately a trade-off for politics between risk and saving money.
Yes, the rollover risk could throw up issues into the future. Jean, thank you very much. Jean Dalbar from Bloomberg Economics. Thanks for your perspective. Now, 9:52 here in London. The economic data, once again, leaving investors split on what it all means for monetary policy. On one hand, the United States, the US economy expanded in the third quarter at the fastest pace in 2 years, bolstered by resilient consumer and business spending. On the other hand, there's a lot of scepticism about the reliability of the top-line GDP data. Here to make make sense of it all. Markets Live currency and rate strategist Ven Ram. You've done some digging then into the print, and this is really interesting, Ven, because this was a blowout number on GDP out of the United States. And I haven't seen any sort of deep dives yet that reveal any scepticism. So what have you uncovered?
Morning, Anna. I think that, what the broad perspective is that, look, the economy, you could quibble about the actual growth number, but the big perspective, the big picture perspective is that the economy is growing, seems to be firing on more cylinders. And that's the big takeaway. I mean, you've got 4.3% growth, even assuming it's about 3.5%, 4% thereabouts. I think that the US economy is doing pretty well. And the Fed expects, the Fed has boosted its own estimate of how much the economy will grow next year to 2.3%. That's well above trend growth. So here is an economy that is doing pretty well. And if you juxtapose that with core PCE that is holding around 2.8% on average this year, it raises a very disturbing question. Should the Fed be cutting interest rates at all in this kind of scenario? Which part of the economy needs addressing with rate cuts? And if your inflation isn't at target yet, why are you rushing to cut rates? That's the big question for the markets to wrestle with next year.
OK, and another question will be whether we need to continue to focus on metals, precious metals in particular. Can the rally continue in precious metals?
It does look like it's going to continue. It's certainly got the momentum, and central banks still seem to be buying gold. Silver is leading gold higher in this particular leg of the cycle. And if that supply narrative of supply squeeze continues, I think that silver will continue to lead gold higher. And markets have caught on to this prophecy that it's going to go to $5,000 an ounce, and so everyone's gold going there is in everyone's crosshairs. And to an extent, this is a bit of a self-fulfilling prophecy for the markets. Everyone in the markets expects that level to be crossed, and therefore it does look like we may get to that level. But the question is, what is the risk reward beyond that? Gold can't keep rising. It's risen 70% this year. That's the second best annual performance since 1979. But the irony is that if you had bought at the peak in 1979, it took you years and years before you broke even. So I think that, investors need to pay some caution to how much they are paying to acquire gold.
OK. Yes, maybe keep that fact in mind if thinking about whether this is the right time to get into this trade. Looking at central banks in 2026 then, Ven, I mean, are we looking at a full range of hawks, doves, neutral, everything in the mix in terms of central banking?
Well, I think that, at least a few of the central banks are going to be hawkish. In fact, the Reserve Bank of Australia and Reserve Bank of New Zealand are already showing inclination that they are going to pivot hawkish. You've got the ECB that's going to be much more neutral because, inflation is a target. It's probably the clearest read on which central bank is going to stay put. Switzerland also is averse to negative rates, so I think they may stay put. But in Canada and the US, I think interest rates actually need to go higher. In Canada, the markets are pricing some chance of a rate hike. But in the US, as you know, Anna, people are thinking and the markets are thinking that the interest rates are going to come down because of what Trump wants. But we'll see how that goes. But it's going to be a very interesting 2026 for the rates market for sure.
Yeah, absolutely. Complex for all the usual reasons, and then with a sprinkling of politics as well. Thank you very much, Ven, for your contribution this morning, and indeed throughout the year. Markets Live currency and rate strategist Ven Ram with the latest on some of the central bank thinking as we head into 2026. A quick word on the markets then. We're really quite flat on European equities. Not many of the European markets are actually open. We are open in London, open in Paris, open in Amsterdam, in fact. But Germany is closed, Switzerland's closed, and many of the other Eastern European markets and Northern European markets closed. US futures pointing a touch slower, but it is Christmas Eve. Have a good holiday, everybody. This is Bloomberg.